These are stats from March for the Sarnia and Lambton region. What we saw here, the average price of homes sold was around $562,000. The dollar value of all homes in March was $86 million. So this was a decline about 5.5% from the same month last year. We actually saw less dollar volume and less sales in March. So really the demand was less technically than in February, and it was down 17% from March 2021. So that is actually a pretty huge number because clearly we had less than last year, and those went down, and we had only 0.6 of a month of inventory, but there was 17% less sales. So clearly more homes sitting on the market and less homes selling in March as compared to the year before. So really quite a slowdown.
Hey everybody, welcome back to the Canadian Real Estate Channel. I'm Adam J.D. Martin and this is Sarah Arseneault. She's here to talk to us today about the Sarnia market update. So Sarah, what's going on today in Sarnia?
Hey everyone, thanks for having me on here. Well, I was on here last month as well, and we thought more inventory was coming, saw signs of spring, but a little disappointed that spring didn't happen in the real estate market in terms of inventory anyways, but it was still a busy month. So let's dive into some of the stats and kind of look at what March brought.
Yeah, I'm looking forward to seeing your presentation, and particularly because if anybody's just watching this for the first time, you may have already clued in that Sarnia is kind of a closed board, so it's really hard to find data on this market or see data from the outside if you're looking at, say, something like a House Sigma. So we're all excited.
Yeah, I know some clients sometimes have success with House Sigma with Sarnia, but not very often. So it's definitely something that you better to have the inside know. These are stats from March for the Sarnia and Lambton region for this channel, and I've done it in the past, but I really just focus on Sarnia as that's the biggest city center. There's definitely still investment opportunities outside the city as well, but most of my investors that I work with like to kind of focus on the Sarnia because that's the biggest city with, jobs and amenities. So good for tenants and renters. What we saw here, just some tidbits that I saw in March, the average price of homes sold was around $562,000. So this still went up from February, so still higher. I think February was around $550 off the top of my head. So still a little higher, and it gained 14% from last year, March. So still a pretty sizable increase. I know it was higher from 2020 to 2021. But I guess the question, as everywhere, is when will these increases stop as interest rates keep rising, right? The dollar value of all homes in March was $86 million. So this was a decline about 5.5% from the same month last year. So we actually saw less dollar volume and less sales in March. So really the demand was less technically than in February, and it was down 17% from March 2021. So that is actually a pretty huge number. And as I get to this next slide, it'll give you a little bit more of what I'm talking about there. So this is kind of like our new listings in March. So as you saw, like in 2018, that's kind of when multiple offers and stuff was just getting started around here prior to COVID. Not every home would go into it, but it would be kind of like, oh, it's just like Toronto. We're seeing, a few of them in family neighborhoods. In 2019, obviously went down 176 in March, but 2020, as it spiked, it went to 193. So last year we were low on inventory. 2021 we had 206, but this year we actually saw less, so 202. So our hope of these numbers going up actually was squashed because I thought, we started seeing more and more listings the end of February, but they were all must have just been grouped kind of into that first week of March before March break, because clearly we had less than last year, and those went down, and we had only 0.6 of a month of inventory, but there was 17% less sales. So clearly more homes sitting on the market and less homes selling in March as compared to the year before. So really quite a slowdown. Have you seen that in your other areas as well that you work in?
Yeah, absolutely. Months of inventory seems to be down, and there are a lot of listings, it seems like, in the various different markets, but average price is actually been going down in most of the markets that we've been reviewing. So this is interesting, but to me, like, it generally makes sense. Like, if you're uncertain about whether or not this is going to be your time to sell, I could see how some people would be jumping on the bandwagon with the media and everything and just saying, you know what, I'm going to wait and see. Seems to be sentiment.
Yeah, and I mean, I have it both ways. I have clients as well that, they want to sell, and I agree with them as well. They want top dollar, and they're like, if I wait any longer, if
Yeah.
interest rates rise more, am I going to get less money? And all we can say as professionals is, yes, that's a very valid that could happen, as interest rates go up,
Yeah.
especially these country homes and these higher price homes. These are in our area what we're seeing most hit. So in some ways for investors, that's not a bad thing. As usually if we're looking at single family homes, we're well under the 500,000 in terms of what the investors in the area were looking at. And then obviously as you get into corporate and multifamilies, it can be a little bit different financing as numbers anyway, so not as much affected. But I do believe kind of the bulk of what's being affected here and slowing down is those family homes that are moving and buying and selling. Because, I think one of the huge ones, obviously, we have wars going on, resurgence of COVID. Many clients, had COVID in March, so that resurgent. And then it's March break, so people were going away. The world was opening up. So I think if you weren't stuck in the house, you were away. And I think that kind of just stalled a lot of sales, or people weren't driving around, bad weather, things like that. But I do think this is really interesting to look at in terms of Sarnia anyways, because we see 2018 and 2019 where, we had 1.1 months of inventory, and yet we had way less listings than we do now. So it just shows how the demand, whether it be from investors or people moving to our area, has really went up. So the demand and the housing doesn't correlate, even though we are seeing more than we had previously. It's just not meeting the demand. So we'll see what the budget plans and things like that are going on in Sarnia right now. That's more in May, it's coming up, but plans to basically for new development. So we'll see what that brings. But as of right now, the demand is definitely still there. I do see it slowing a bit, and I have noticed as well some people moving back that moved here last year.
Yep.
Especially with gas prices. So I know a few that I've seen that even took buyers on the showings, and it was in that kind of investment kind of pricing under 400, and we're like, why are they moving? They just bought last year. And it was, well, they drive to London every day for work.
Yeah.
With gas prices, it doesn't make sense anymore. So we're seeing these people that thought they had really good deals moving to Sarnia, sold in these more expensive market, are actually returning because, as we know, COVID hasn't lasted forever, and the market's changed with that.
Yeah, it's an interesting observation, and we actually had a similar observation with, like, for example, when we did the Toronto market update, we saw a lot of people in the past couple of years left the downtown core because it was so expensive and there wasn't really a purpose to be there if the downtown wasn't open and your offices weren't open. And now that things are actually really opened up down there, we've seen a lot more demand cycling back into the downtown and sort of away from those sort of fringe communities. So I suspect that is possible for a lot of the various markets. The one thing I will say about Sarnia, though, is, you guys are still 300,000, I think, on that average you said. You're still about 300,000 behind London. And so still a very attractive market for people if they have they can get a similar job in Sarnia versus living in London. I mean, if you're saving 300 grand, that's a lot of salary. That's a lot of savings. And also the market rents are just simply lower there from a affordability perspective. So, if there's people that are looking for a smaller cost of living, but potentially similar career path, like I think Sarnia is still a great market. And for that reason, I think it's still a great investment. You guys are so far behind some of the core cities, but it's a big city. There's a lot of population. There's a lot of jobs. It's no joke, right? It's a border crossing. Like this is a real city. So I think that there's still lots of opportunity here. And, maybe that's being shown by the months of inventory on this graph. But one other thing that we've been seeing a lot in some of the other markets actually is terminations, like a lot of terminations and people relisting, but perhaps that's not quite happening in your market. Like you're not seeing that sort of double count on supply where you're seeing a bunch more technically new listings in the stats, but
yeah, I would say we are seeing it a bit, and I don't know if it's being for the exact same reason, but here where I've noticed it is they list it, they're looking for a bidding war, it doesn't happen, and then they're like, oh, actually, like, do you have anyone to go through? I'm like, yeah, I have the perfect investor, and they're like, yeah, but they want 50,000 more.
Yeah.
And if we don't get it, we're going to take it down and relist it.
Yeah.
So we are definitely seeing those. There are the other route as well. There was a house I'm going to take a client to today. It was listed last month for 100,000 more, probably was too high. And now it's listed for 100,000 less, probably to stimulate interest and try and get closer to what they originally wanted. But you're definitely right. These numbers, and in any market, is it a true, 202 listings last month, or were 5 or 10 of them, which is a huge number when it's, talking about 0.6 months of inventory, was some of the relists.
Yeah.
Or was some back on market because the deal fell through. So there's definitely seeing more and more of that. And the conditionals have definitely changed. I've even noticed for some clients that need financing conditions, it's still hard to compete in multiples, obviously, but at sometimes I'm looking what has been on the market 7 to 14 days, and there will be those, which I haven't seen in months, see those stragglers where there's a few homes that are still on the market.
And what is the relationship right now to list price to sold?
It's about 113%, I believe it was for last month. But I mean, it's so hard because our market is so, like, we're not like a London or Toronto. Like, look at the amount of listings compared to London or Toronto.
Yep.
So some of that is so vast. Like, I mean, there was a country property I know that went 200,000 over. So when you mix that with, the one that was priced maybe correctly and didn't go over, I really, and I try and tell investors and clients this, we can't just bid 113% over and expect to win. Like, we have to be property specific, but they're still going over. It's very rare still that I've seen anywhere that they're one going under, unless it's kind of like, a flip or something where it's just really not priced right. They get multiple offers. They're all under asking. Well, they're going to pick one, like it's going to happen. They've seen the market at this point, but yeah, it's still strong with over asking. Conditions can sometimes fly now. Like, that is happening in a lot. And I think people are getting excited, but I think they're getting overly eager, saying, well, it didn't sell last month, so, it has all this different flooring and conditions can work. I'm like, that condition probably only worked because they bid so far over the next lowest offer.
Yeah.
They're taking a risk for a reason, and it's not like 5 offers and you had condition in your 2,000 over. They're not choosing you.
Yeah, that makes sense to me. And so where do you see this headed? Like, do you think that this demand is a fad right now? Do you think that Sarnia's actual employment and everything supports the price difference that we've seen, like, in the last few years?
I would say we're definitely, like, I even remember, like, my father talking, he owned duplexes and things in Sarnia in the 80s and 90s, and he remembers years it went up 1% a year, or sometimes not at all. Yep. And then when interest rates, went up to 13, 14% in the 90s, people were losing their homes. Like, it was a blue collar town, and when people get money, they like to buy toys, and, they couldn't support everything. Now, as Sarnia has grown, Toronto and everywhere got a bit of a head start, but now we're starting to see, like, 2 years ago, 30% increase. This year, month to month, 14%. Like, we're starting to see that increase. I would say, like, jobs definitely support it. Like, in terms of the people that have jobs, there is a very blue collar town, but there is definitely those high-end engineering and chemical engineering and all those jobs that the people are living in. as we see more and more people that move from Toronto and move from the area, we are getting also more diversity, more new business, more ideas. And, before we couldn't support, a bubble tea shop. Now we're seeing 5 bubble tea shops, I think I know, in Sarnia and Petrolia, between them, which is amazing. It's nice to see this diversity and people actually supporting them and these new businesses flourishing. The distillery there, Crown Royal, the Diego Group, is building that new facility. So I'm not sure exactly when that's starting. It won't employ many people when it's done. I think it's only about 80, but it's 400 hectares of land. So that's going to need a lot of people to build.
Yeah.
I mean, we have the Nova AST2 that's being worked on right now. We have a Nova shutdown being worked on. I think there was a Shell shutdown. So they all just we have these businesses in the chemical and the production that keep resurfacing and new employment. So I do think it's definitely an area where it does support these prices at this time. Obviously, it sucks for those first-time buyers and those people not in the market, those locals. Because, yeah, I agree. It's hard to get in the market, at $500,000 for a starter home when you don't have anything, you're just starting. But for investors, the rents still definitely support it. Like a 2-bedroom right now in most of the city, including the South End, is 1,800 plus utilities. I had a townhouse, 1,800 plus utilities that just rent. And there were so many people lining up. I did basically an open house style for it because there were so many people looking to rent it. And
Yeah.
they're all like begging you to accept them because, it wasn't anything special, but it's a 3-bedroom home.
Yeah.
I need something. It's a townhouse, no backyard. I don't care. I need something that's around this price point.
Yeah. And so it sounds like you probably have also a very low vacancy rate, right?
We do. Not even in buying homes, but in rentals. Yeah. So right now, and people, unfortunately, but we see this everywhere. A lot of them were like, "Well, my landlord's selling our home," and the people are moving in.
Well, the reality is, the higher the purchase price goes for the average house in the city, the higher the rents will also be driven up as well, because the supply will dry up, and that's just kind of how it goes, right? That's just reality.
Yeah, and in previous, I find a lot of the investors, or whatever you want to call them, at that time, 20 years ago, they were just normal moms, dads, blue collar workers that, had a little extra money, and they weren't doing it to be an investor. It was just like, hey, let's buy this, let's rent it out and see. They're not trying to scale and burr, but they're buying these homes. So these people are now in their 60s, 70s, 80s, and they're starting to sell their homes because of the price point. And that's where these tenants that are paying, $1,000 a month or whatever it was, that made sense for what they paid for it, they're either being kicked out or it doesn't make sense anymore. So you're definitely right. It's driving it up, and now a family moved into it that owns it. So where's this rental going now? Because now they don't have a rental, and there's not one built for everyone that's taken, right?
Yeah, absolutely. There's a certain lack of supply of housing in all of Ontario, and I don't think the disproportionate, increase in population and lack of supply in the entire province is not going to just not affect Sarnia as well. But I also do think that your rents are lagging far behind some of the average, like, big cities. Sarnia is a big city, and I think that the average rent and also the average purchase price are just stuck, or were stuck rather, in a different time. And now maybe, this is a reality check, and it's unfortunate for those that have to suffer because of it, but it's a reality check on what the actual real average cost of living is for, Canadian in a major city, or an Ontarian even in a major city here. So I don't think that we're heading to a point in Sarnia where it's like this crazy overinflated cost of living. I think it's just, you've literally just caught up to where the rest of Canada has been living for the last, 5-10 years. And, I think that's also a good thing for the players in the market that are being savvy investors and using fundamental investment strategies like the BRRRR, which you mentioned, right? Investing for cash flow, buying smart in volatile markets is always going to be the way to win. And I think in all the markets we've been reviewing and updating this month, the common theme is stick to the fundamentals, right? If you're purchasing right now, it's because you've found a great deal that you can apply strategic renovations to. You've got multiple exit strategies in terms of you can either BRRRR, you could list it, potentially a short-term rental. There's all these different strategies, but we need to stick to the fundamentals. Like, don't be panic buying or panic selling right now, right?
Yeah.
Do your homework, work with a local expert, right? Who's your power team? Work with Sarah, work with somebody in the market who can tell you about that, even just the listing to sale ratio, right? Like what is it? How much should I be offering? What's the right offer? Are these prices fair? Are they logical? Are they going to continue, right? And your local experts are the only ones that can see this data. So
I totally agree with you. And yes, like you can still find good deals when people are saying they want to flip. It's kind of like buying a speculation stock in the stock market. You're like, yeah, well, only so far can our prices, I get it's a moving ready home when you're done, but as interest rates go up, there has to be an equilibrium. So I definitely agree. They need multiple exit strategies. We need to look at the BRRRRs. We need to look at your portfolio and say, hey, this needs to make sense, because I can't guarantee, because the last home went crazy on the street, a month ago, I can't guarantee when you're done this home that outlier will be worth the same as yours. And that's where, some investors even call me conservative. I'm like, you still need to make this logical and make sense, because this is a volatile market we're seeing here as well. And just because, in your area, your pricing, that makes sense, we need to, it's your investment money at the end of the day, and you don't want this to be your last investment either.
Yeah, absolutely. If you're trying to scale your portfolio, the only way to do that is going to be by making, good fundamental plays. And I think the hype, the news cycle, the things that we've been encountering, and even just really the raising prices in the last 2 years are an interesting thing to just take a moment and think about. Like, just before you're panicking and rushing into a market, a deal, a neighborhood, whatever, just think about it. And the best way to think about it is by, assembling the right power team. And I firmly believe that you need to have the right realtor for you, the right mortgage agent, the right lawyer, accountant, and everybody else that's going to be involved in the sale, the right contractors, because all of that is going to change whether or not you're successful inside your actual deal. So, well, thanks, Sarah, for the market update. I think that gives us a good understanding of where the market's at, and potentially a bit about where it's headed. And I hope people will continue to reach out to you and get this data as it's happening. Because like I said, this board is definitely a bit more closed off. It's harder to find this information without using someone great like Sarah. So where can we get a hold of you?
As always, Instagram, Facebook, my handle, She Will Sell It. That's probably one of the easiest. It'll also show my phone number on there as well. So reach out and we can set up a call, or you guys can come down and we can look at some investment deals and see what works for you guys.
All right, fantastic. There's deals in every market, guys. So make sure you're liking and subscribing to this channel so you can stay updated and hear more from Sarah, and give her a call, because she will sell it for you. And if you haven't already, make sure you're doing all those steps. Reach out to Sarah, and we'll see you guys next time for the next Sarnia market update. Cheers.